that's the fundamental difference. Let's go down into a little more detail and see how it really affects us if we're unresolved about what the market's actually doing. Here's the alternate count zoomed in. What the alternate count implies is that the 40-day cycle is expected to form a trough right about here. This is called an FLD pattern projection box, which projects where it expects the trough to occur. And you can see price dipped into that, and it has started rising out again. So it looks as if it might have been a fairly good projection. It was expecting a trough of the 40-day cycle. Now let me switch back to the alternate analysis and see what Sentient Trader is saying is expected now, and you will see that it is expecting a trough of the 20-week cycle, a longer cycle. So it's expecting this trough to be a trough of the longer cycle. Let me turn on the same FLD pattern for the 40-day. Now, I am trading the 40-day cycle on this chart. I'll speak a little bit more about that in a moment. I know there's a chat message waiting. I just want to the punchline of the current part of what I'm saying, because the punchline is really, really important. Right, so we have two alternate analyses. You might think, oh, that's no good. We've got two alternate analyses. What do? Am I frozen by indecision? Does that mean I shouldn't be trading this? If I'm not an experienced analyst, what do I actually do? That's where the robustness of Hurst's cyclic theory really comes to the fore. Hurst's cyclic theory is very robust. What do I mean by that? I mean that two people can have completely different analyses, but it does not affect their trading. It will affect their trading in subtle details, such as how confident they feel in a trade, where they feel the target is for a particular trade, and subtle details like that. But the basic trading decisions they made is often not going to be affected by a different analysis. That means that even if you are a fairly beginner Hurst analysis, and you're producing analyses on Sentient Trader, you're very likely to be making very similar trading decisions to an expert analyst who is performing a much better analysis but making the same trading decisions. Let me demonstrate to you. Here, the software is expecting a trough of the 40-day cycle to be occurring round about now. I have told you we are trading the 40-day cycle, so therefore we are going to trade long, probably, a move out of the 40-day cycle trough up to the target, which is over here. You can see that the target is around about 1350, the center of that red box. So we would be interested in entering a long trade, or we probably should have entered it a few days ago. If I look at the other analysis, what does that say about the trading? Well, it says that we're expecting a 40-day trough round about now, perhaps only in a few days' time, after which price is going to move up into this kind of zone, hovering around about the 1300 level. And you can see that on this particular chart, I've enabled trading, and Sentient Trader has, in fact, placed a buy order there. So the net result of two fairly different analyses is that you both agree that the 40-day cycle is offering an opportunity for a long trade from current levels up to a level of about 1300. That is why I describe Hurst's cyclic theory as being very robust. You can have different analyses, but often you're making the same trading decisions. And of course, at the end of the day, the trading decisions are what really count, because that's what you're that's how you're making money. We can have a great time sitting here in Sentient Trader chat talking about different analyses, but at the end of the day, you want to be trading properly. I see several chat messages I've missed out on. Let me catch up. Is that what you do when you get an inverted bull-bear cycle label? Okay. No, Chris, I assume you're speaking about inverted analysis. An inverted bull-bear cycle label is a little complicated, and I'm not sure I can answer it fully today, but I will try. Let me zoom out and show you how to do this, and let me go back to the preferred. Sentient trading is a methodology that extends upon Hurst's original trading methodology as he published in his cycles course in the 1970s. Sentient trading actually basically analyzes the shapes of each one of the cycles. Okay, let me turn on the whiteboard and see if I can do this. So let's take a look at this 80-day cycle from here to here. That's an 80-day cycle. Sentient trading methodology says that every cycle consists of 4 shapes. There is a wave 1, then a wave 2, then a wave 3, and then a wave 4. Okay? And that particular shape could be any one of a variety. It could go like this, or it could go up a lot, down a little, up, down. But every single cycle has 4 legs or 4 legs to the cycle shape. That's what the sentient trading methodology is about. What Sentient Trader does is it analyzes the cycle shape of every cycle that plays out, and it plots it here at the bottom, as you've seen. Bull A, Bull D, and so on. Those are all, and bears, there are bear patterns, and so on. Those are the cycle shapes that it has identified. It uses the cycle shapes when it's performing trading according to the sentient trading method. Okay? Let me switch off this whiteboard and zoom in a little bit and show inverted shape is. You get 5 different bull shapes, and you get 5 different bear shapes. They're labeled imaginatively bull A to E and bear A to E. And you also get 6 inverted shapes. Now, an inverted shape, always, without exception, indicates a failure in the analysis or a weakness in the analysis. If we zoom in here, there is a perfect example, except it's in dark blue and you might not be able to see it. But here, there's an inverted bear. What is an inverted shape? An inverted shape is, let me turn on the whiteboard again. An inverted shape is a shape like this that starts over here, goes up in its first leg, goes down in its second leg, goes up in its third leg, comes down in its third leg. An inverted shape is a shape where the middle point is lower than both the start and the end shape. A perfect shaped wave is shaped a bit like an M. That's a perfect shaped wave, where the middle point is higher than the start and the end. You could trade the first wave, wave 1, and the second wave, wave 2, and the third wave, wave 3, and the fourth wave. You can trade all 4 of those waves. Inverted pattern is one that looks like that, which is a distorted M, where the middle point has dropped down below that level. An inverted shape is always an example of a poor analysis. Now you can, I'm going to divert just for a moment longer, and you can take a look at what are called the wave shape statistics, where Sentient Trader will present you with the number of every single wave shape that occurs in this particular data series. You can see that there are 76 bull A's, 87 bull B's, and so on. There are 11 inverted bulls, 10 inverted bulls, and so on. There are very few inverted patterns. Here are the inverted patterns. I hope you can see them. Those are the inverted patterns. There are always very few of them because they're an indication of a poor analysis or an unresolved analysis, whereas there are many more bull and pure bull and pure patterns. I hope that begins to answer that question. It's a complicated question, and that answer is something I'll probably touch on every week for here on outwards. Eusebio asks, is there a minimum recommendation for the length of history to analyze relative to a specific cycle? That's an interesting question. Yes. Sorry, it's taking me a moment to think about it. The minimum amount of time that one analyze. Let me zoom in. We are trading the 40-day cycle. All right. Here's the 40-day cycle here. Now, to be able to trade it successfully, you need to see how the 40-wave cycle behaves under a very great range of differing conditions in the market. Those differing conditions in the market are really defined by the number of cycles that are longer than the 40-day cycle that are moving up and are moving down, and how they work in that combination. What happens when 3 of them are going up and 5 of them are going down? So there I'm talking about 8 cycles than the 40-day cycle. In fact, you're talking about a minimum requirement. As a minimum requirement, the software should find 3 cycles longer than the 40-day cycle before you should trade it. 3 cycles longer than the 40-day cycle is the 50-week cycle. So you need to perform an analysis over enough data that the software is able to find strong evidence of the 40-week cycle. How much data do you need? About 3 times the cycle. So 40 weeks, about 120 weeks. There's an answer, sort of 2.5 is about as a minimum recommended history. Ronnie, how can I arrange that orders are in the chart, please? Okay, that's really easy. Orders are placed in the chart. There's trading button here. I can turn off all the trading and turn it on again. Let me actually switch to a different workspace. I haven't opened workspace open in Apple in case we wanted to talk more about trading. Here you can see a workspace of Apple up to yesterday. I think I updated it with many trades, some losing trades, some winning trades. It's presently in a winning trade. It's doing very nicely, and you can see it's long 23 positions. You get a lot of summary information over here at the top left of your chart. You can show trading information and hide it simply by clicking this button there. By turning off trading information, it all disappears. You must bear in mind, Sentient Trader doesn't just automatically there. Sentient Trader will perform an analysis, but the trading that's performed, you need to build a trading history or start stepping through your chart day by day, and it'll produce trading advice. You can change what information is displayed in the top left here. If you don't want to see this information, you can use your tools chart, and you can select here what different things you want to see on your chart, or whether in fact you want to see nothing. If all that information on the top left of your chart irritates you, you can simply turn it off. Okay. Right. Before we move away from the S&P 500 and handle some more questions, I would like to throw something out there. It's something that I've thrown out there several times before. Nobody's really risen to the bait and challenged me on it. One of our Sentient Trader users pointed out last year that they believed that there was strong evidence of a 6-year cycle active in the S&P 500. So here I have done exactly the same analysis on the S&P 500, just to sort of wrap up our discussion of the S&P 500, and I have included a 6-year cycle. With Sentient Trader, you can build your own nominal model. You're not limited only to the cycles that Hurst believed were present in the data, or the cycles that I believe are present. You can build your own nominal model, and you can perform an analysis on the basis of your own theories about what cycles are really present in the data. And I have built a nominal model which includes a 6-year cycle. In fact, let me quickly show you that that nominal model. You can see the longest cycle is 9 years, then we have a 6-year cycle, then 54-month, then 18-month, and so on, all the way down to 5 days. And I performed an analysis using that nominal model, and if I turn on the semicircles, it presents something really very interesting. First of all, it finds a 4.5-year cycle trough in 2003, as does the other analysis. It finds the next one in August of 2007, exactly as does the other analysis. It then finds the next 18-month trough in March of 2009, exactly